Good morning, everyone, and welcome back to the Daily Hunt for Multibaggers. It's Saturday, January 17th, 2026, and we're looking at some fascinating data collected yesterday, January 16th.
That's right, Ethan. Our AI has flagged quite a diverse basket of about a dozen different stocks today. It's a real mixed bag out there, with a lot of community excitement, but also plenty of underlying risks to consider.
Absolutely. We're seeing some high flyers writing major news, but it always comes back to digging into those numbers. All right, let's kick things off with Micron Technology, MU. The community is strongly bullish, celebrating massive gains, and we saw significant insider buying. It was rated stay away yesterday, but the AI is now flagging it as a potential buy.
Well, Ethan, while the strong revenue growth and insider confidence are certainly positive, we can't ignore the notably high debt-to-equity ratio here. It's definitely a risk factor. However, with the projected AI memory explosion and global chip shortage, those future developments have the potential to override some of those current liabilities.
For MU, given the strong catalysts and insider confidence, our AI-generated insights suggest a buy. Next up, Nebulous Group, NBIS. Users are incredibly bullish, especially with news of their 28% stake in ClickHouse, valued at $15 billion, and a Morgan Stanley price target of $126. This was also a stay away yesterday.
The ClickHouse valuation is certainly impactful, adding billions in perceived value. However, the company is still currently unprofitable with a negative EPS and a high debt-to-equity ratio. It's a classic case of future potential versus current financials, but the strategic assets do make a compelling argument.
Given the significant intrinsic value from the ClickHouse stake and strong analyst sentiment, NBIS gets a buy for investors with a higher risk tolerance. Moving on to Immunity Bio, IBRX. The sentiment is extremely bullish. People are talking to the moon, with recent Anktiva sales jumping 700% and great clinical results. It was a cautious buy just yesterday.
Ethan, I'm seeing a negative price-to-book ratio, which signals negative shareholder equity, a big red flag. The company is currently unprofitable, and the stock is trading near its 52-week high after a massive surge. This looks like speculation, not sustainable growth yet. For IBRX, despite the exciting news, the underlying financial metrics mean we have to stay away. Now, Rocket Lab, RKLB. The community sentiment is quite mixed, with celebrations of past gains and analyst upgrades to $105, but also some skepticism. It's been stay away for a while. It remains a stay away for me, Ethan. Rocket Lab is consistently unprofitable, carrying a high price-to-book ratio, and we've observed significant insider selling. These KPIs signal a very high-risk speculative investment, even with a defense contract.
Agreed. RKLB continues to be a stay away based on the current financial picture. Let's talk AST Space Mobile, ASTS. There's huge optimism around recent defense contracts and a massive total addressable market, with some comparing it to SpaceX. Still, our AI has often flagged it as a stay away.
And for good reason, Ethan. It's deeply unprofitable, has an extremely high price-to-book ratio, and we're seeing net insider selling. While the defense contracts are positive, the valuation is simply astronomical for a company with no current profits. The high beta makes it incredibly volatile.
With such high risk and no path to profitability yet, ASTS remains a stay away. Up next, Irene Limited, IREN. The community is quite bullish on its AI cloud platform and potential power grid funding. It was a buy on January 14th.
Well, the positive news is definitely pushing sentiment, but my analysis shows a very thin net profit margin, an extremely high beta, and significant insider selling. That level of volatility, combined with insiders cashing out and low profitability, makes this a highly speculative gamble. The risks outweigh the rewards here, so Irene is a stay away. Let's discuss Ondas Holdings, ONDS. Users are saying ONDS is next after the company raised its 2026 revenue guidance significantly and closed a $1 billion offering. Another stay away yesterday. The raised guidance and capital infusion are good, but Ondas is still unprofitable with a negative EPS, a high debt-to-equity ratio, and a high price-to-book ratio. The future growth needs to materialize into solid profitability to justify the current valuation.
So ONDS is still a stay away until we see real earnings. How about Intel, INTL? Sentiment is cautiously bullish with discussions about a government stake and rumored Apple partnerships.
Ethan, the PE ratio is astronomical at over 780. That's priced for perfection many times over. Plus, they have a high debt-to-equity ratio and near stagnant revenue growth. The catalysts might be there, but the fundamentals just don't support the current valuation. For Intel, it's a stay away for now. Then there's Palantir, PLTR. Users mention its expansion into quantum and space, reflecting past success. Despite the growth narrative, Palantir's PE and PB ratios are extremely high. They've seen insider selling, and the stock has been falling more steeply than the broader market recently. The market is clearly questioning the sustainability of its valuation.
PLTR is a stay away. Moving to Planet Labs, PL. Users are celebrating recent gains and mentioning AI tailwinds.
Planet Labs is unprofitable, with a significant net profit margin and a very high debt-to-equity ratio. The price-to-book ratio is also exceptionally high. This is another case where the rally isn't backed by fundamental profitability. PL is a stay away. Next, Supermicrocomputer, SMCI. Some positive buzz around new AI retail deals and a credit line, even talk of a short squeeze. I'm seeing negative revenue growth, Ethan. Users also report significant past losses, and there's net insider selling. While AI demand is a tailwind, current performance and insider actions contradict a strong buy signal.
SMCI is a stay away. And finally, Intuitive Machines, LUNR. Some talk about recent acquisitions.
Oh, absolutely not. LUNR is deeply unprofitable, shows negative revenue growth, and has an extremely high debt-to-equity ratio. An analyst recently downgraded it to hold. This is a very high-risk situation. LUNR is a definitive stay away.
All right, Brooke, quite a few stay aways today, but let's recap our top candidates for deeper analysis. Investigate as buy, Micron Technology, MU, Nebulous Group NVIS, NBIS. Investigate as cautious buy, none. Investigate as speculative gamble, Immunity Bio, IBRX. And that wraps up another episode of the Daily Hunt for Multibaggers. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place and knowledge is your best asset.
Thanks for tuning in, everyone.
We'll catch you next time on the Daily Hunt.